Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. Market volatility and sector updates. This video presents a direct informational narration of the source document. We're looking at 5 key areas today based on the source material. We'll start with macro events and geopolitics, move into the options market frenzy, and then break down semiconductor sector earnings. From there, we'll check out AI leadership and networking, and finally wrap up with key heavyweights and movers. Section 1. Macro events and geopolitics. The source document highlights that U.S. July ADP private payrolls added just 44,000 jobs. This actually marks a new intraday low and clearly signals a slowing hiring pace. Because of this, the market is hyper-focused on the broader non-farm payrolls data to confirm if this employment trend is really stabilizing. But here's where it gets really interesting. The cooling job additions don't tell the whole story, because we're actually seeing an acceleration in wage growth. It hit 7% for job changers and 4.4% for those staying in their current roles. So the crucial takeaway here is that despite a broader hiring slowdown, there's a very distinct structural tightness remaining in the labor market. Adding to this macro complexity are some specific geopolitical developments noted in the source. We're looking at pre-market reports of a potential 30-day interim agreement between Iran and Oman concerning the Strait of Hormuz. This is juxtaposed against reported Houthi attacks on a Saudi tanker, along with multiple airstrikes by Iran on a location identified in the source simply as 80. These are massive potential catalysts for sudden market volatility. Section 2. The options market frenzied. The source points out a massive record-breaking surge in bullish sentiment right now, with over 4 million S&P 500 call options purchased. At the exact same time, the put-to-call ratio plummeted, showing a daily change of negative 0.12. This aggressive buying of out-of-the-money calls forces market makers into delta hedging. Basically, they physically have to buy the underlying assets to cover their own risk, which mechanically drives the index even higher. Based on all this options activity, clear technical boundaries are forming for the S&P 500. The 7,700 level is acting as a massive put wall, a really strong support floor where institutional hedging automatically triggers buy orders. Above that, the 7,800 to 7,850 range is the current bullish target zone for large capital. Finally, the source identifies the 8,000 level as a strong structural resistance, created by institutions selling call options at that strike price to offset their costs. Section 3. Semiconductor sector earnings. The source details a fascinating trend with highly anticipated earnings from SanDisk and Western Digital. SanDisk posted an impressive fourth-quarter revenue of $8.97 billion, up 372% year-over-year, with an adjusted EPS of $39.25. Western Digital also showed strength, hitting Q4 revenue of $3.75 billion, up 44%, and an adjusted EPS of $3.56. But despite these incredibly strong historical numbers, both stocks faced immediate selling pressure. Why? Because their forward revenue guidance, $10.3 billion to $10.8 billion for SanDisk and $4.1 billion for Western Digital, only met rather than wildly exceeded market expectations. And this harsh market reaction wasn't isolated. The source highlights another major tech company that generated $1.92 billion in Q2 revenue, which is a 53% year-over-year increase, alongside $1.27 billion in net income. Yet, its stock plunged 22% post-earnings. Similarly, Global Foundries reported $1.79 billion in revenue with an adjusted EPS of $0.46, but delivered an uninspiring Q3 EPS guidance of $0.32 to $0.42. It shows that right now, the market is severely punishing anything short of absolute perfection. With this intense scrutiny on tech fundamentals, the source document raises a critical question. How might looming regulatory actions impact the physical supply chain for AI hardware? Section 4. AI leadership and networking. The source notes a rumored FCC ban targeting U.S. imports of Chinese data center components, specifically optical modules. While this news initially sparked a rally in domestic networking stocks, a sobering reality is setting in. Domestic manufacturers simply cannot immediately fill this massive supply gap. It would take an estimated 2 to 3 years to build adequate domestic capacity, relying heavily on foreign raw materials in the interim. Alongside those hardware challenges, the document outlines major leadership shifts. At Google, their chief AI scientist has departed after a 27-year tenure. This occurs amidst ongoing delays for their flagship Gemini AI model, raising industry concerns about their competitive position. However, there's a fascinating nuance here. Google is actually investing in and providing cloud computing support for the departing scientist's new AI startup, so it suggests an evolution and restructuring of talent rather than a simple loss. Section 5. Key heavyweights and movers. Diving into specific equities, we're once again seeing a stark divergence in market reactions. Ticker Lab reported Q2 revenue of $392 million, up 104% year over year, and provided a massive Q3 revenue guide of $541 million to $560 million. But despite completely shattering expectations, the stock dropped. Conversely, the source shows ticker S surging past its annual resistance line after posting a net income of $1.5 billion, a 66% increase year over year. For ticker S, a crucial new support level has now been established at 142.5. This brings us to one of the most notable catalysts mentioned in the source document. A statement attributed to Elon Musk declared that SpaceX will only use NVIDIA GPUs, stating their VR-Win architecture is currently the best AI compute. This endorsement acted as a powerful market driver, pushing NVIDIA's stock decisively past the 215 resistance level. The source concludes with a highly anticipated event regarding SpaceX's share dynamics. Following a 13.6% post-earnings stock drop, the company faces its first major share unlock event, releasing a staggering 911.5 million shares. This effectively doubles the available float, meaning the number of shares actively available for public trading. This will be the ultimate test. Will there be enough buyer demand to absorb this massive influx of shares, or could restricted selling by insiders trigger a sudden short squeeze? It leaves us questioning how the underlying structure will handle this much sudden liquidity in a market this heavily leveraged and sentiment-driven.